10-year note yields open up the week moving lower after seeing a range of 419 down to 414. Yields ended up closing the session at 416, down about 3 basis points from Friday's settle. Now, not much on the calendar today other than the Treasury announcing its borrowing needs for next quarter, coming in at $740 billion, in line with expectations, so not much of a market mover there. Ultimately, the market will be looking forward to Wednesday and Friday. Wednesday, of course, is the FOMC meeting. Friday, non-farm payroll, the big one being Wednesday's FOMC and the big FOMC post-press conference. Not expecting to see a rate cut this week. However, the market continues to price in a full 25 basis point cut at September FOMC, with small odds now starting to rise of a 50 basis point. Again, very small, but worth noting. Clearly, the market going to need some clarity from the Fed and the FOMC this week. Again, seeing yields open up slightly lower to start the week at 416. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that despite the fact that yields were lower today, we did see volatility nudging higher to start the week. Clearly, the market sitting on the edge of its seat, needing some, waiting for the expectations of FOMC, the press conference, and of course, non-farm payroll later on. So right now, as we await those events, we see volatility moving higher despite yields moving lower. Lastly, let's talk about what we have tomorrow. Tomorrow is Tuesday. We get a bunch of housing data. We also get the JOLTS number, as well as market kind of peeking ahead to next Wednesday, peeking ahead to Wednesday and Friday for FOMC and non-farm payroll. So opening up the week, we see yields creeping lower, down to 416, down about 3 basis points from Friday's settle, ahead of tomorrow's housing, JOLTS, and don't forget Wednesday's FOMC and Friday's non-farm payroll.